All right, everyone, I'm going to go ahead and get things going here. Thanks for joining. As a reminder, we will be recording this, and there will be notes as well posted on community.notional.finance, which is our Notion board where all Notional community things live. So I'm just going to jump right into things then as well. So probably makes sense to start with the Q4 market update. Teddy pushed this out a few weeks ago. Obviously, we're a few weeks into the quarter one. But I think it's just a good idea to go over all of this. As a reminder, it was only 2 months that Notional V2 was live of the quarter, but nonetheless kind of should give us a good idea of where we're headed. And it's been a strong start to the year as well, even though, some of the prices maybe don't reflect that way in the general crypto market, but it's been a strong, first few weeks for us at Notional here too. So that's great. So, just to start on that, we're currently sitting at around 455 million in TVL. When this Q4 market update went out, we were around 550 million. The majority of that decrease is basically the market rate changing on main collateral types, which would be Ether, basically. So the awesome stat here from the Q4 update really is that we facilitated $244 million in loans over those 2 months. It really was skewed to borrowing, especially at the beginning. But as the quarter kind of went on, it definitely became a little more even. At one point, because things were skewed towards borrowing, we actually did see interest rates jump up to 12% at one point, which is pretty crazy again to think you can go lend fixed rate, 3, 6 month, and 1 year maturity around 12% in some decent size. Obviously, that attracted some lenders, and like I said, things kind of balanced out as we moved through the quarter. Ended the quarter with 130 million in lending. Most of that was, actually almost all of that was in USDC and DAI. So we saw about 132 million loan volume in USDC and about 107 million in DAI. And then the rest of that came from Bitcoin and Ether markets. As I mentioned earlier, it was interesting to see that a lot of the activity early on was from borrowing, and then it did shift a little bit to get a lot more like lenders on the platform, and things really balanced out. It created some interesting things in the yield curve as well, I think, because of that. But something to kind of note going into that, looking at the yield curve between the 3 month, 6 month, and 1 month. On Notional was that for DAI, the yield curve was even more inverted, and that really again was because there was so much borrowing early on, and then as we kind of moved through, there was more lending and then pure volume. So it's kind of something interesting to track, and we're going to try to do a lot more commentary, going forward on kind of the implications of some of those things, as well as how it relates to like the general crypto market, and even looking at like TradFi and kind of doing some education work or those things. And so that's something I'm looking forward to diving in a little bit more with you all and pushing out some content on some of that stuff. So so that's great. Let's see. All right. So, the last piece, I guess, on the Q4 update that wasn't necessarily in that blog post, but I think is important to note is that we are still making, some pretty good money as a team out. We were around like 150 million in revenue. That is split between the trading fees essentially that are earned is sitting in C tokens essentially. So so that's awesome. That's a pretty good chunk of money, and definitely like on the right track. So good to see there. Some bookkeeping things to note here around V1. This is kind of just a call out for anyone that's still got positions there, but we are deprecating V1 on January 31st. So coming up here pretty soon. Some of the notes there around that is that we're going to turn off liquidation bots, and then any accounts that have unpaid debts, we will go ahead and settle that. So if you are borrowing USDC against your ETH, we'll go ahead and sell the ETH in exchange for USDC and repay your debt there. Your funds are still safe. You'll be able to, there is no time limit for you to like withdraw your liquidity or your assets. But as far as being able to borrow against them and have an active debt, that will stop being the case. So if you still got positions there, make sure to go there and get them repaid, and your funds withdrawn and flipped over to V2. And I don't know if we can post this, or I can go ahead and post this here, but it's v1.notional.finance is where you can see that if you do still have some positions there. So that's that. To go over, I think that's important to be really transparent on, is we did have a bug that was identified via the Immunify bug bounty program. This was a larger bug than we would have hoped, but ultimately we did end up paying out a $1 million payout with a $100,000 note for that Immunify bug bounty. I think the bright side here are a few things. One, all funds were safe and we didn't experience any loss of customer funds. So that is the biggest piece to highlight, and something that is like the number one importance for us at Notional, is like making sure our users' funds are always safe. And then on the other side of things as well, like I think it did demonstrate that these bug bounty programs work. As I mentioned, like all funds were safe, and we were able to do the payout and communicate with Immunify, and things ultimately went really smoothly with that. And excited to have that program, and that bounty, that $1 million bounty, still exists there today as well. So ultimately, not what we want to see happen, but I think the protocol and the team handled it really well. And very grateful for the team at Immunify and the person that found the bug. So moving on from that, let's talk about the note staking module. So this was something that we probably talked about on the last community call, but we are pushing the note staking module into audit here in just a week. So to give a little bit of recap of what that is, when we launched Notional, we saw a tremendous and still have a fairly large amount of TVL. And it was really important to the community as well as to us that the value of the note token is pretty strongly correlated with the success of the protocol. And this note staking module is one of those things that the community suggested, and we have been building since those conversations, and will achieve a few things. One is that it will tie the success of the very much to the price of note. So essentially this operates similar to, or basically, a buyback program. So the fees that are generated on Notional, some of those fees will be used to purchase essentially note. Underlying it's actually LP tokens that split an 80-20 pool between note and ETH, a balancer 80-20 pool. This functions very similar to like what the Aave safety module does. And then that's kind of then the final piece on it as well, that it functions as, and that is like, this is a backstop for, if there are any issues to the protocol down the line, is that this group of funds would be there as a backstop. So kind of access to two things. One, it gives note holders an extra upside to the appreciation and the success of the protocol. And then on the other side, it helps make sure that we have this extra backstop on top of all the other pieces that we have in place. So really excited to get that out into the world. And as I mentioned, it's going to audit here in about a week, and hope to have that out in just in a handful of weeks. We're still trying to get it out in February. So relatively quick turnaround. I believe it's a Code Arena bounty program that we're doing through it. So if you are a security auditor, developer, and you want to get familiar with the Notional code, or already are familiar with the Notional code, you can hop in there and check out that note staking module. And if you find any issues, recommendations on it, you can get paid pretty handsomely. So So take a look at that coming down the line, and really excited for that ultimately to make that the world. Moving on from that, we have been working for the last few months on a new UI update. I talked about this in the last community call. It is live now as of late last week. The big difference here is the way that we display information around essentially liquidations and your like collateral health as it relates to your portfolio. So in the past, we used a collateral ratio, and we're moving. We already moved to a you're seeing with on a layer compound, and so ultimately a really beneficial update, I think. If you go to your portfolio on Notional, you'll see that there's liquidation prices that are displayed there, and that essentially shows the exchange rate risk. So, if the price of Ether goes from 3,000 to 2,000, will your portfolio be at risk kind of thing? From that, there's also people that are borrowing against their end tokens. For example, you deposit USDC, you mint NUSDC with that, and then you borrow USDC and mint NUSDC again, and kind of in this leverage loop. We've seen a little bit of that activity, but it's been really hard in the past to kind of understand what the risks are in a portfolio that looks like that. And so we have started displaying liquidation interest rate risks, which essentially show the risk to your portfolio as interest rates change. Obviously, if you have USDC and you're borrowing USDC, the USDC is more or less always going to be worth the same, but there is a risk of the interest rates on the exchange rates between NUSDC and CUSDC changing. And so that's kind of what that update shows. And then the last piece of it here is really just a kick-ass tool that we've been supporting and really excited to put out, and that is info.notional.finance. We partnered through our bounty program with a group called Shipper DAO, and they've built some really awesome tools to help simulate portfolio risk, as well as like a transaction explorer and just some general data points on the protocol. So I would recommend checking that out. It's an awesome tool. I use it all the time. It really helps to, you can go in there again, and especially as your portfolio becomes complex, where you might have several different collateral types like Bitcoin and Ether, and you're borrowing against it. It really helps to understand, all right, if the price of Bitcoin changes this much or ETH changes this much, what does that do to my risk for my portfolio? So that's a really awesome tool and something that we're continuously building with the Shipper DAO. And you'll see a lot more on that page as we go on into the year. So, kind of coming off of that and just talking about the bounties program, I would recommend going to community.notional.finance, and you can see everything there. Again, that's where the community call will be recorded and uploaded, as well as the notes and no missed calls. So you can see all that there. There's also things around the Notional Blitzes, and then the community grants and the bounties program. As I mentioned, we've been funding the Shipper DAO through the bounties program or the grants program so far to build info.notional finance, and we've given out a handful of other grants. Some of the ones that are coming down the pipeline as well is we've co-sponsored a bounty with Aztec for their zk.money page, which is essentially a ZK rollup technology, layer 2. Super excited for that. What we're getting built there, and it's currently in the works, is allowing essentially people to have privacy, as well as lower gas fees as it relates to working with Notional. So it's not a full Notional deployment on a layer 2, but it does allow people that are on the Aztec network to interact with the Notional contracts. And that, again, was funded out of our bounty program. So excited to see that, and really great to see that program as well, just like making moves. So take a look in the next few days here. We'll be uploading a bunch of new bounties. So hopefully there's something there that piques your interest. If there's not, and you do really want to do something with Notional and have an idea for how to grow the protocol, there is a open request form through the grants program that you can fill out, and be happy to figure out how to get you funding if you've got a really solid plan. feel free to reach out to me on Discord as well if you'd like to chat about it before submitting a application as well. So moving on from that, all of the Notional early LP NFTs have been distributed. It was a little bit bumpy of a process, and I know some people have been like, asking where it's at and that sort of thing. Ultimately, they were all done by hand, and so like I said, it was a little bit bumpy as far as some of them got missed and some of them, I thought went out that didn't go out. So all of them now have gone out. I've gone through it a second time to make sure that there wasn't anything missed, but if you aren't seeing your Notional early so it exists in like your regular OpenSea portfolio, but make sure to check that out. And then also, if you are going to be at ETH Denver, make sure to bring the wallet that has one of these NFTs in it, as we will be doing, or we do have a little special surprise for you. So kind of a little alpha drop there on some of the first utility that's going to be, or that is there for these NFTs. And I think just a sign of a lot more to come in regards to bringing utility to these NFTs. And then, the final piece there on NFTs that I'll mention is that we do actually have an open bounty right now for helping to build out some different utility use cases for the NFTs. So if NFTs are your jam and you're really excited about Notional as well, and you'd like to help us figure out how to bring the most utility and the most value to the holders of that NFT, would love to collaborate with you. And it's also an opportunity for you to make some money on it as well. So reach out to me. Would love to work on it with you. So yeah, so that's awesome. Moving on from there, I think there's some really, really cool integrations to talk about here that we've been working on for the last few months. To start, we've got Instadap. So we've been working on this with Instadap for a while now. And for you guys, if you don't know exactly what Instadap is, they are a smart contract or wallet that helps you manage your DeFi portfolio. They are a juggernaut in the DeFi space. They have, I believe, around 9 billion in TVL. And so a lot of these really big positions that are out there in DeFi use Instadap to manage those portfolios. And the reason why you use Instadap is a few things, but most notably is that it helps you save on gas between doing transactions. They allow flash loans. They allow you to refinance and swap from one protocol to the other. And so that's why they've been able to amass such attention and such TVL. We are really close to pushing out a full integration with them that will allow folks to go from basically do everything you can on Notional today through Instadap's interface and allow you to manage your positions, let's say from Aave or Compound into Notional. So essentially refinancing, as well as just being able to, borrow and lend and do all the things you can on Notional, through Instadap. So really, really exciting integration there. I think there's also some other use cases that aren't necessarily a part of their general UI that we're excited about, and they're excited about as well, building out here as we keep moving that integration forward. So take a look at that. There'll be more information coming out pretty soon on that. The other really exciting integration that we've been working on for about a month and a half is with Indexed Co-op or Coup. I still don't know exactly the best way to say that one. But what the Index team and the Notional team have been building is essentially a bond ETF. This is a way for investors to passively gain exposure to the fixed rate lending positions on Notional. So this is just the start too of that integration, and really there'll be a lot more to come as it relates to different maturity types and different tenors, or different maturity dates, I should say, and collateral types. We're starting today with the USDC 3-month maturity, but basically, again, what this allows a user to do is to gain passive exposure to the 3-month maturity date on Notional. Today, you have to roll that lend forward every 3 months, and this kind of allows a portfolio manager to not have that nuisance and obviously avoid, all the gas costs that are related to that and so forth. So a really exciting product. I think it fills a really great hole for portfolio management. Obviously, in traditional finance, although we roll our eyes at bonds and the interest rates that are generally there in traditional finance as it relates to bonds, it is still a massive market. In fact, it's like an order of magnitude probably larger than the equity markets. And so nothing like this exists in DeFi today, and we are bringing that into DeFi with Index Co-op, and really will allow people to build these balanced portfolios that can be anchored around fixed and structured products. So really just an amazing integration, and couldn't be a better team to be working with on that. So keep an eye out for that. We've posted the discussion on the Index Co-op forum, and so you can go there and comment, and if you have any questions, feel free to reach out there or on our Discord as well around that. Moving on from the integration stuff, we are working on layer 2 deployments. I think, as I mentioned earlier, we've got this bounty with Aztec money. That's not quite a full L2 deployment, although, it will allow people to save some gas, and there's some other benefits and stuff there I already mentioned. But what I'm talking about here is a full notional deployment where you can do all of the things you can on Notional mainnet on layer 2. So providing liquidity, borrowing and lending, and managing positions and redeeming end tokens and everything like that. And we're currently looking mostly at Polygon for our first deployment, although I think we have a bigger multi-chain strategy beyond just that. But essentially, as these contracts go to audit next week for the node staking module and some of these other pieces, the focus will change. I shouldn't say the focus will change. That will become the number one priority, I guess, moving forward after that. So expect to see a lot more information around our L2 deployment really in the next handful of weeks coming up soon here. So moving on from that, we would love to find a game or some type of community related activity that we can all do. Some of these other DAOs and protocols have done chess tournaments and things like that, just to essentially get all of us together, give us a chance to hang out and not have it all be focused on, fixed rate products. So just a chance for us to get to know each other and hang out and have some fun. So still trying to figure out exactly what game or what activity we want to do for that, and exactly when and what cadence and stuff it will be, but would love to get your guys' input on it. Would love to hang out with y'all. Some of the early thoughts, I think that could be cool. As I mentioned, people do this chess tournament, so we could do something like that. But we could also do something like a online Settlers of Catan or a Monopoly Go, a poker tournament kind of thing. But ultimately, we want to create something that we can do on a regular cadence. Maybe it's once a month, and it's an opportunity for the community and you all to come hang out with the Notional team and for us just to have some fun. So I'll go ahead and post a poll in the community chat to try to get some feedback from y'all on what you guys would like to see there. But excited for that to roll out and hang out with y'all. So then the last kind of piece here to mention is that we are launching as of today, a new Notional Blitz. This Notional Blitz was inspired from the impression mining program that Index Co-op has rolled out. It's been a huge success for them. And just to give you guys kind of an overview of what impression mining even means, essentially it's a way or a schematic to standardize. What's the best way to explain this? It's a way to standardize the, I shouldn't say influencer marketing, but a way to standardize the marketing activity that we incentivize from the Notional protocol. And so, what that looks like for Index Co-op is that they do $10 per 1,000 impressions. So you post a tweet, you get a bunch of excitement around it, you get a bunch of impressions, and you can actually get paid out from Index Co-op for that. We're launching something very similar here, and really, I guess, just trying to kind of trial it out to figure out what a full program would look like. So we're doing that in this Notional Blitz. We're giving away $750 to three different people, or sorry, I should say $250 to three different people. So total of $750 in note that will go to the most thought out, tweet threads or individual tweets. That is kind of there just to incentivize people that maybe don't have the largest following or can't get the massive amount of impressions in a short amount of time that larger accounts do. So this is an incentive for them to still participate. And then on the back end of that, the core piece of like what this program could become or what this Blitz is trying to figure out is that, again, this impression mining piece. Can we create a standardized $15 in note per 1,000 impressions and drive some like real traffic and excitement around the product value that Notional creates. So we'll be pushing out details here shortly on that. I know I didn't exactly roll it out the smoothest, so apologies on it. We'll have the exact details of what that looks like, how to participate in that going forward. I believe Kyle and I will post it here really shortly. So take a look out for that. Would love to see you guys' tweet threads and have some activity there and drive some more awareness for Notional. And then the last piece of it kind of relates to this impression mining thing as well, but we are going to trial out a resident meme lord. So this will be a month-long position. We will highlight this person on the different Notional channels, most notably the community page, but I'm sure they'll get some love from us on Twitter as well. This is a paid position that will be funded out of the Bounties and Grants program, and the responsibility is for this person to be the meme lord of the month and to generate some awesome, hilarious memes over the course of that month. And then also they'll be eligible for the impression mining program that we eventually roll out as well. And so it's not only an opportunity for them to get paid from us via the Bounties and Grants program, but also an opportunity if they create a viral meme to get paid out really well via the impression mining program. So that's kind of all I've got today. I know we're right at a half hour. I'm going to stay here for a while. Would love to take some questions from y'all as you have them, and I can kind of open things up.
Hey, Cameron, would you mind if I say something?
Just go ahead and raise your hand if you do have any questions or comments, and I can invite you.
Hey, Cameron, can you hear me?
Any takers?
Okay. All right. Hold on.
All right, guys. Well, with that, I'm going to go ahead and call it. We'll be doing a community call at least once a month. So come hang out with us again next month. We'll have the Notional Blitz details. I believe Kyle's already posted them in the channel. New bounties coming out really soon. Take a look at that. And then also we'll have this community hangout for all of us to do something fun together to engage with here shortly. Kyle, looks like you just joined. I'll go ahead and let you.
Yeah, I think maybe you can't hear, but Teddy wants to talk. So go ahead, Teddy, if you can hear me.
Okay. All right. Okay. Cool.
Looks like you are muted, Teddy.
I don't think I am. I think a number of people have said they can hear me. So I just wanted to make a quick announcement. So on this note staking module, so we're going to be launching this.
Weird. For some reason, I can't hear him, so that's great. You guys can.
Yeah. So we're going to be launching this note staking module in a couple weeks, and as part of that, we are going to need a strategy for how these note buybacks should be executed, right? So we're going to need to figure out, because the protocol earns revenue on an ongoing basis. And so we're going to need to figure out, basically how the actual note buybacks should be executed. So not everything should be bought at the exact same time, right? Because that doesn't make any sense. Because it would push the note price to infinity on a very temporary basis. So we're going to need a strategy for note execution, and then we're also going to we would like to have a member of the community be our treasury manager and actually execute on that strategy. So we're going to have some more details here, but I just wanted to let you guys know that, as a community, we're going to need to figure out how we want to execute these purchases. And then also we would like to sort of have someone who can execute this strategy for the notional community that isn't a part of the core team. So just wanted to let you guys know all that stuff.
Alrighty, so I've been notified that Teddy is done chatting. I'm not sure why I couldn't hear him. I'll have to figure that out for the next one. I believe a few questions popped up as well here, so let me figure out how to get these guys invited. All right, Rashomon, you're up. I'm going to have you join here. And then Way to Wealth, you're on deck. I'm going to invite you as well here in case Rashomon is no longer available. Hey, Rashomon, look like you made it in.
Hi, can you? Which are coming. Just maybe a simple question for you guys, but are all of these going to be totally independent, as in the liquidity, the interest rates, the pools are going to function totally separately? They're not going to be any overlap between the Ethereum implementation and Polygon, for example. And then the second question, I see that the ability to repay loans is still turned off, with the message being that Fcash is idiosyncratic and can't be traded. Do you have any idea when that will be turned back on again?
Yeah, both great questions. To start on the L2 side of things, it's really, so the short answer is we don't have it all figured out yet. That being said, I think it's really important to make sure that liquidity is not fractured everywhere. And it's partly why as well, we wanted to be really intentional with how we roll our multi-chain strategy out. So although nothing's set in stone yet, I don't imagine us to have this fractionalization, like you mentioned, where everything is different on every chain. The idea is that the main notional protocol lives on ETH mainnet, and that everything else will kind of reflect that. So that's that piece of it. Then, as it relates to the idiosyncratic Fcash and not being able to pay back those debts. So this essentially happens when we have 3 month, 6 month, and 1 month maturities, and as we go from let's say you borrow at 1 year, 3 months goes by, that Fcash is now actually essentially a 9 month maturity, and that's not an active maturity that we support on Notional today. And so that's why that Fcash becomes idiosyncratic and unavailable to trade. We do have ideas of how to fix this, how to have a different user flow essentially going forward. But as of now, essentially it will be 3 months until you're able to trade that. And I know now with the roll what happened 21 days ago, so we're already almost a month into that. So about 2 more months, and that will become unlocked. I don't know if there's anything else, maybe Teddy, that you wanted to add on the idiosyncratic Fcash challenge there, but and again, I probably can't hear you, so if you are chatting, so.
So I actually, I think, Cameron, you did a good job with the idiosyncratic Fcash thing. So Rashomon, just to echo what Cameron said, it's going to be untradeable until it is a 6 month Fcash asset. So it's, you got about 2 months left. And then just to add on to the layer 2 thing, so, definitely the idea here is in the longer term, for the markets on all the different layer 2s to tie back to each other. So ultimately, the way that's going to work is, what we want to do for our sort of like long-term multi-chain strategy is have Fcash on, one L2 be able to be transferred to another L2 and treated as fungible as Fcash on that other L2. And essentially what that's going to do is it's going to allow arbitrage pricing between the instances of Notional on different chains. So that will keep the prices in line, right? Kind of what you're saying, Rashomon. Now, but an important thing to note here is that is challenging to do at the moment, and is probably kind of going to be part of our Notional V3. So in the intervening term, to begin with, the instances of Notional on L2s are going to be just entirely separate, right? So it's going to be like basically a different system. Now, the revenue that is earned on that system is going to accrue to note holders like normal, but that sort of Fcash fungibility in between Notional instances is not going to be there to start with.
Okay. Yeah, I think that makes sense with my understanding. I mean, if you're talking about things being interoperable, you probably need some sort of bridges to make that work, which is probably a very high level of complexity. And then just back on the Fcash situation. So, if I took out a 9-month loan, it was redeemable for a period of time. Now it doesn't overlap with any existing maturities. And now you're saying, okay, once it gets to the 6 months, it will overlap. So how close to an existing maturity does it have to be in order for it to be tradable?
Long dark period, right? So when you actually took out the loan, if it was 9 months, that means that you took out the loan at the very end of the previous quarter, right?
Right.
Yeah. So that's how that works.
So if I want to repay it, I have to actually. So say it was. I think everything's public here, but say it was like 20 something September maturity. I have to wait until the 27th of June, for example, and on that day, I'd have to repay it on that day. On the 20.
Yeah, you need to wait until the next quarterly roll, which is I think March 27th.
29th.
Yeah, 29th. Yeah.
Okay, so it'll be on that quarterly roll date.
Yes, on that quarterly roll, it will once again become tradable.
But the first couple of weeks, it was tradable, like for the first month. So the whole of November, I viewed it as tradable. That's a bit surprising.
Yeah, that's because when you traded it, it was still tradable on the then 1 year market. Right. And it was tradable until the previous quarterly roll. And then It became untradeable for the duration of this quarter.
Okay. All right. And then one more question. The error that popped up in terms of the note distributions for those who are providing liquidity. There was an error whereby the note allocation was actually going into reverse, and that was going to be fixed and calculated. How far are you on?
In a week, so that fix will be fixed, as well as the process for airdropping the missed note allocation to folks that are affected.
Okay, thanks very much. That's all for me.
Yeah, thank you, Rashomon. All right, Way to Wealth, you're up, man.
Hello, everyone. Hi, I had a question for Teddy. What I heard is we are planning for a buyback strategy in future so that we can have a buy pressure on note, and probably it will help increase the prices of note token. Is that understanding correct?
Yeah, that's and then just increase the price of notes. But yes, we are. That's part of our upcoming note staking module. Yeah.
Okay. So are we planning the burn mechanism also? Like we are buying back some note and then burning some also?
No, so we're not. So actually, the way it's going to work is basically note that is staked. So the note that we buy back is going to be given to the people who have staked their note, right? So you imagine, and we're gonna write up like a post, and that'll help you sort of think through the economics of this. But like, you imagine that if 1 million note are staked, right? And the protocol buys back 100,000 note with some revenues. Those 100,000 note are going to be given to the people who have staked their note. So you staked your note, and you're going to earn, you're going to increase your note holdings by 10%, right? Because you personally are going to receive that extra 100,000 note that was purchased. It's not going to the protocol. It's not burnt. It's delivered to the people who have staked their note.
Okay, that is great. So we are planning for single asset staking in future.
It's not exactly single-sided staking. It's you're actually staking 80-20 note WETH balancer LP tokens. So they have minimal and permanent loss because it's an 80-20 LP token. But it is not purely single-sided staking. And the purpose for that is basically we want to make this staking module more productive for Notional. So it's going to be, you're going to be providing liquidity. And you're also acting as like a sort of a systemic insurance as well.
Okay, got it. Now it is clear to me. There's one more question which is around Blizz award. So considering the fees on Ethereum platform, sometimes it gets very costly to provide liquidity for some of us. So is it possible that these awards can be in the form of LPs?
Let me make sure I fully understand the question. Are you talking about providing liquidity via the balancer pool and wondering about the note incentives that are there?
Yes. Like, for example, if the award amount is $500, for example, and the person who wins the blitz, basically he gets the note tokens of worth $500. So I was just trying to say that instead of that, is it possible that we can think about basically providing the liquidity for the protocol on the winner's behalf and then giving him the LPs?
So you're saying giving them the LP token as the reward instead of just no tokens. Yeah, I think, that's definitely a super interesting proposition. I would imagine what would make more sense probably is to distribute the note tokens via layer 2. So again, whether that's like Polygon or Arbitrum or wherever we note L2 deployments end up, that's where the future like distributions for these grants programs as well as for the notional blitzes and stuff will be paid out via. So that being said, the liquidity, the 80-20 LP pool on Balancer probably will remain on mainnet. So yeah, interesting proposition. We'll have to think about it some more. Definitely realize that it's a challenge and stuff for some of these notional blitz payouts and whatnot. To get $500 and spend $300 in gas or $200 in gas or whatever is a big bummer. So would love to figure out something better there.
Yeah. Okay. Thank you for answering.
Yeah, of course. Thank you. All right, cool. Well, that's all we've got today. We'll be in Discord, obviously, as always. So if you guys have some lingering questions that pop up after, feel free to message there, and looking forward to the next one. Cheers, y'all.